Pensioen Pro Partner Webinar met Tom Jessen.
Hi there, and welcome to our Pensioen Pro Partner Webinar exploring the world of Timberland investments today. My guests are Angie Davis, Managing Director and President of Campbell Global. Good to have you at the table.
Thank you very much.
And also with us is Stephen Levesque, Managing Director of Forest Operations.
Thank you. Pleasure to be here.
Good to have you. So let's begin, but first we have also questions for you. We have some poll questions to know you and your interests a little bit more. So this is our first question. You can give your answer in the screen you see. What aspect of Timberland investments do you find most appealing? We will show you the results within a minute, but first it's good to know Campbell Global a little bit better. Can you explain something about your company?
Yes, Campbell Global. We're a timber investment management organization founded over 40 years ago in Portland, Oregon. We have a track record since 1986, and we've built the firm now to $8.9 billion assets under supervision. So what do? We acquire, manage, and dispose of forestry assets on behalf of institutional and high net worth clients. We built a team of over 150 professionals. Importantly, and one thing that makes us a little bit different than our competitors is that we have over half of our professionals are foresters on the ground managing the assets that we acquire on behalf of our investors. Then we have the other half of the employees who are reporting up to the investment advisory function, and we have an acquisition staff, we have compliance and legal, accounting, the full complement of the investment advisory services within our firm. We focus on core markets and core regions, and what does that do for you as an investor? It reduces your overall risk profile. And those core regions, we do have a slide on that, are North America, Australia, New Zealand, and within Latin America, which is a core region, Chile being its OECD country and reduces your geopolitical risk. Carbon is now a very important part of the forestry asset landscape, and we've been in the carbon markets for 14 years now. And we have the professional expertise to produce and sell the highest quality carbon assets that those in the market that are buyers today, they're expecting and require. In 2021, we merged with JP Morgan, and we think of that as just a nice alignment between a boutique investment advisory firm, all we do is forestry, and then this large asset management firm with the research and the access capabilities that then our boutique firm can really dial into.
That's very interesting, and it's also important to have a lot of knowledge about this topic. Can you explain a little bit about the people who you work with, the expertise you have?
Absolutely. Well, Stephen here, he's a biologist by background. Maybe you want to talk about your background?
Yes, started out in fisheries biology. That's what I had my undergraduate degree. Spent several years working in Alaska in the U.S. for the Federal Forest Service. And then I went back for a master's degree in forest engineering and hydrology, so focusing on water, and certainly learned a lot about wildlife along the way. And I think I represent many of those professionals Angie referred to in the organization, in the field, boots on the ground, that really have that direct experience, not just with forestry, but with forestry in those core markets where we operate. So, yes.
So how big is your team with all the people?
In the U.S. right now, there's about 75 people, a little more than 75 people in the U.S. scattered around 14 states.
Yes. For forest operations, and then 150 in total. We have PhD forest economists. We have an acquisitions team in each of the major regions. We have people who all they do is the math around forestry and the carbon math around forestry. So it really runs the gamut.
Yes, exactly. And I would just add too, we have accountants, general ledger accountants, and we have log accountants that track all the loads that we ship on a daily basis. So a firm is really set up to have that core focus on forestry.
That's great. So a lot of expertise.
Yes.
With that, let's take a look at our poll question, and maybe we can share the results, because we asked you what aspect of Timberland investments do you find the most appealing. Here we have the results, and with that, maybe you can explain something about the positive sides of investing in this asset class, Angie.
Yes, well, that's great. I see sustainable income generation won the day at 75%. So that is the beauty of this asset class, that it does provide a steady yield. Think of your yield. Historically, our yield has averaged about 6%, with a total return of 11.8% net. So over half of our return has come from yield. How we look at what our future returns going to look like, 4.5% to 5% is a strong yield number that that we look for in our forecasts. So besides yield, portfolio diversification. So forestry, timberland has low correlations to other asset classes, and that's primarily driven by the fact that the biology around forestry, and that year in, year out it grows, regardless of what's happening in the financial markets.
Right.
It's also a hedge against inflation. These last 3 years, obviously very high inflation numbers. We were a high performer within the asset management group, and particularly the alts group. Then we have what we would refer to as strong returns. So 10 to 12% is a target return for this asset class. And again, over a long period of time, since 1987, we have performed better than most of the major asset classes.
So that's average?
That would be an average return, yep, annual average.
Okay, that's great. So how do you classify the forestry assets?
Well, the good news is it can go in a lot of buckets, and our clients think of it more thematically, a real asset. So they can put it with their real estate portfolio, and some put it in their infrastructure portfolio because of the yield. So that's an interesting one. Also, nature-based solutions, natural capital, that's kind of a new thematic that we're seeing today, and forestry taking up a large allocation of that bucket. And some put it in an impact bucket because of the decarbonization solution that it provides for our clients.
So several approaches here.
Yes, yep.
Okay, that's great. And it's also interesting to know how your company earns money in this sector. Maybe you can explain something about their revenue streams.
Yes, so the strong income yield that we talked about, that 4.5% to 5% total income, that primarily comes from the harvesting of the trees and selling the logs to manufacturers or exporting them. So if I have a 10,000 hectare forest, about 2 to 4% will be harvested per year, or 200 to 400 hectares a year. That creates a yield. I'm selling that into the market, providing income for our clients. Secondarily, what we also have today are carbon assets. So I can create a carbon asset from my forest, and I can sell that into the market. Primarily corporates and institutional buyers are buying carbon assets in order to help them achieve a net zero commitment that they've made to the market.
Right, and the frequently asked question here is, who are the buyers and the sellers in this market? Could you explain something about that part?
The buyers and the sellers would be the major, the buyers are the major corporates. I think it's publicly available information as to who some of Silicon Valley's major firms are buyers. On the sellers, it'd be parties like us, parties like us that are creating these projects, and they're sold individually or a one-on-one transaction between the buyer and the seller.
And many of these corporates are looking to reduce their overall footprint through the supply chain, recycling, energy optimization, But at the end of the day, and you think about the tech companies, there are unavoidable emissions in that supply chain that they can't mitigate. And that's where carbon offsets, carbon assets can come in as a complementary instrument to close that gap to help reach a net zero objective.
Exactly. So that's also my next question about the role of carbon in this forestry sector. Maybe it's interesting to take a deep dive here on this topic.
Right. So trees sequestering carbon, nothing has changed in the science of that. What has changed quite dramatically is how the market is pricing that. And there's really two major roles around carbon or decarbonization. One is creating carbon offsets or assets that we just described. That's a forest project where, let's say I'm taking bare land, I'm creating a forest, and I'm taking that additionality and I'm creating a carbon asset from that. I've sequestered carbon over a period of time, and I'm selling that into the market. So that's one way carbon has now entered into our asset class, but also just the year-over-year change of your forest growing, that balance that we're not harvesting, 96 to 98%, that growth is creating additional carbon sequestration. And that net negative carbon balance, it's one of the only asset classes you can invest in that gives you that net negative carbon outcome versus carbon emitting outcomes from equities, fixed income, other major asset classes.
Exactly. Of course, we have also to talk about the risks, but we will do that later on during this webinar. First, we have incoming questions. You can use our chat to ask questions. What is the return split between carbon and, I can't read the last word because our camera is before the screen. Can you help me out, Stephen? Can you see it on the...
What is the return split between carbon and wood?
Yep. So in that 4.5% to 5% projection that I gave you, think of wood or log sales at 3%, and then carbon at about 1.5% to 1.7% in that total yield of 4.5 to 5.
Okay. Stephen, could you outline the key differences between softwood and hardwood?
Yes. I think fundamentally the biggest difference is that softwood species are trees with needles versus hardwood species which has leaves, a very clear differentiator. And you'll see hardwood and softwood species all over the globe, but the softwood species tend to be in the more temperate zones. Like the U.S. South, like Chile. You know, you have warmer climates, you have faster growth rates, and you'll still have hardwoods in those systems, but softwoods are very prevalent. When you get into the northern latitudes, parts of Europe per se, much more of a hardwood composition. They're slower growing, and generally what you see is lower return profiles on hardwood forests versus softwoods. Another key differentiator, and it's key to our thesis as well, in terms of the end product uses. So on the hardwood side, quite a bit of the hardwood material goes into pulp, paper, packaging, Amazon boxes, and they don't store, they don't have much of a half-life for storing carbon. Certainly the higher value hardwood species you're going to see in flooring, some furniture maybe, and maybe some cabinetry or molding. On the softwoods, though, those trees that we raise are larger, older, mature trees that are ultimately going to get converted into long-lived wood products to support home construction, repair and remodel, and commercial activity. So those species are going to continue to store, again, carbon for generations to come.
Right.
So that's been our focus.
Yeah, and why is it important for investors to know the difference?
Well, I think if investors particularly are interested in climate impacts, and again, you think about the half-life of pulp, paper, and packaging, less than a year, versus, say, the half-life of construction material that might be 60 years. So I think that's one important consideration from a climate perspective. But again, most of the forests that we have are a mosaic, and you'll have a mix of all species. The hardwoods are also really important from a biodiversity perspective. You want to have a mix out there in the forest.
Okay. Next up, we have a question from our audience. How do we in the Netherlands know that we will not fall in the same trap as we did with good woods? Angie?
Well, teak wood in Brazil. I'm not sure exactly what the trap is. Do you know what the trap was with that?
I'm not exactly sure, but I think we could hypothesize. And Angie mentioned earlier, the core markets where we operate, North America, Australia, New Zealand, Chile. Brazil, trees are very happy there, growing super fast. But we do know that there are risks associated in these emerging markets. Even with the due diligence we've done, we had money to place, I think, 8 years in Brazil, could never align the right deal. And it was either issues related to FX, being able to have clear land title, fee title ownership, legal encumbrances. And then also there are large areas of Brazil where worker safety, worker rights, indigenous considerations just aren't part of the equation, and that doesn't fit with our model. Okay. Angie?
Yeah, I would also say if it was relative to a carbon project, what we see primarily in Brazil are what's referred to as avoidance projects. So you're avoiding deforestation. Many of those projects have not come to fruition. They sold offsets. There were buyers of those carbon offsets, but the math really didn't turn out to actually avoid deforestation. And again, a high quality carbon asset, you will prove additionality. You will prove that I have sequestered carbon year over year. It's been verified. And you do that through, again, an afforestation project. I'm taking bare land and I'm planting a forest. That is clear additionality. And so that is also a difference that we see primarily around the Amazon and some of the projects there.
Yeah, that's great. And people have seen in the news quite a bit of press, negative press on some carbon offsets, and many of them, as Angie said, are associated with an old RED or RED Plus program that was a UN effort to reduce deforestation. Our goal is to really deliver more removals rather than avoided emissions.
Okay, that's clear.
I'll do some research on Goodwood.
Okay, that's good. You mentioned the core regions before, but you did not mention the Europe's forestry sector. Why don't you invest here?
Well, two reasons. When we look at core regions, again, Stephen described a softwood focus, and that softwood focus going into an end product of dimensional lumber, which we're building new homes, repairing homes, and also for tallwood buildings. As we mentioned in Europe, there are quite a few hardwood forests, number one. Number two is, what is the investment thesis and what type of returns are we looking for? I talked about a target return of 10 to 12. Historically, Europe has been in the low single digits. Why is that? Were you going to ask me?
Yeah, of course.
So one, high land costs. So just very expensive to buy here. And secondly, you have much smaller tracts. So if we're looking at buying 10,000 hectares, in a transaction, maybe you'll see here 500, 1,000. And what occurs then is you just have higher operating costs. And when you're trying to achieve a target return, you need to obviously manage your costs. So harder to do with the smaller land base. I can't trade those.
But can you imagine it will be interesting in the future?
We can certainly imagine carbon projects here. And yes, there could always be an opportunity where we see a larger offering and we'd be interested in that. We've done due diligence in Latvia on larger transactions. So it's a possibility for sure.
Stephen, also an important question is how your company address climate change related risks in this investments.
Yes, increasingly important topic, and I think we're learning that the past can't be the best predictor of the future, but there are important learnings from the past. And so our approach, first and foremost, is avoidance. And it really comes down to how we define the investable universe. So we look historically at rates of precipitation, rainfall, temperature, frequency, magnitude of natural disturbances like fire, windstorms, hurricanes, pest and disease. So we get a good idea of what occurred historically, and now we actually have the opportunity to use forward-looking climate projection models that give us a sense of what the future may look like. A good example I like to use is Chile, core country for us, love the region, but in the south of Chile, historically a high rate of wildfire, and the models show that it's going to get less and less precipitation. So we've excluded that region of Chile from our investable universe. Secondarily, and equally important, I believe, is once we acquire a property, and it's part of our underwriting, how do we create the most healthy, resilient forest out there? Because healthy, resilient forests are going to survive, change. They're going to be ready to adapt. So fire, for example, is native to many of the forested ecosystems. In fact, critical in many ecosystems to have fire as an element. And so if we're controlling the debris on the forest floor, if we're taking out the dead and dying trees, we have this vibrant, healthy forest. And also, I'd say, lastly, if there is an event, and events do happen, one of the magical things about trees is like they have bark, so they have this protective layer. So if you have a wildfire that comes through, it may scar up the bark, and then we can actually go out and harvest those trees and capture that value and get it immediately replanted. So I think those are the key points that I'd like to share on climate.
Okay. We have a question for you, so you can use your poll function in your screen. Which factor do you consider most critical for timberland investments? That's our question, and we can see the results later on. Let's move on to the diversification and resilience part, because that's also very important. Let's start with diversification.
Yep. So specifically, again, forestry has historically had low correlation statistics relative to the other asset classes. And again, that is primarily due to the biological growth. I can give you an example of how a client that we have, how they performed in 2023 and how Timberland performed in their portfolio. So this client, it's a large client, $100 billion fund. They actually have a Timberland allocation of 1 to 7% of their total portfolio. And they have a significant real estate portfolio as well, about 10% of their total portfolio. In 2023, their real estate returns, which were actually quite good relative to the market, were negative 5.8%. We all know, commercial real estate struggled in 2023. Their Timberland returns were 11.4%. And so they manage those two assets. I said we have clients who include Timberland and real estate in the same bucket, and they manage them together. So those Timberland returns being negatively correlated to real estate were an enormous benefit to the pension plan beneficiaries during a rough year in real estate in 23.
Right. And what about the resilience part?
Resilience relative to what?
For example, real estate again?
Yep. So those returns, meaning if I looked at the 3-year returns, the 5-year returns, those returns they don't necessarily track together. So if real estate is having a phenomenal year, 5 years ago, we may have seen 15 to 18% returns in particular years. You may have seen forestry in a 7 to 8% return environment. But again, that's what we do expect. And also, inflation, which does make it a resilient asset class. When we see higher inflationary periods, forestry actually tends to do better in those higher inflationary periods, better than inflation plus. So if we have inflation in that 3% range, forestry tends to do, say, 12 to 15%. So that hedge against inflation also makes it quite resilient.
Right. Stephen, what are the core operations involved in the forestry business?
Yes, I would say slightly different operational tools and techniques that we use depending on the landscape that we're in, but I would say there are many commonalities. So let's start with, we've just completed a harvest. The most important thing is that we get those areas replanted, and our goal is to have those replanted within 12 months of harvest. Usually for every tree we harvest, we're planting 3 or 4 in its stead, making sure, just like a garden, that the ground is well prepared to receive the seedlings, and you've got the right seedling in the right location and planting it at the right time given the weather. Once we establish that stand, we call it free to grow. So we want to make sure we have the right number of trees per acre. We control competing vegetation. We may thin out dead and dying trees or trees with defect, and ultimately to get to that larger stand that's got those what we call crop trees. And then the cycle begins itself. In some regions, we may be actively conducting intermediate thins through the life of the stand, or in some areas like the Pacific Northwest, it's largely get it planted, let it grow. And then, of course, along the way, we interact with lots of people to bring this life cycle together. And so it's working with local contractors, regulators, community members, making sure that we're connected to the communities, that we have social license, and that we have the right expertise to be able to execute on these tasks. And everyone thinks about forestry, and many think about the harvesting side of the operations, but really it's 80% planning and 20% execution. So we spend a lot of time making the plans and then bringing them to life.
Yeah, and how can investments in forests positively contribute to the environment?
Well, I think there's many different ways that we make positive impacts and contributions. We've talked somewhat about climate today. You know, trees are still the best technology we have for sequestering carbon. Photosynthesis is elegant, and it takes no artificial energy. And so the ability to manage these forests in a way to sequester, but also just protecting these important carbon sinks. And we know forest cover loss is increasing every year around the globe. So protecting these sinks, enhancing them. We touched on biodiversity, opportunities to improve species richness. And I think on the environmental impact side, maybe just a couple others that I would bring to light. One is water. Water is the lifeblood of the planet, and we have the opportunity to provide clean water for wildlife, fish, amphibians, but also domestic users. Many of our properties are supplying high-quality water to residents. So I think those just highlight some of the key areas where we really can make meaningful impacts.
Okay.
We also are often the largest employer in some of these very rural areas where forests tend to be. And so paying a living wage job in these rural communities is an important part of our social footprint.
And with the scale we're at, tax bills, also generating income for these local communities is a big deal.
Okay, why is that a good thing?
What do you mean, a good thing? Well, many of the communities, rural communities, rely on some type of property tax base to fund the fire department, the police department, other, critical services. And so active timberland owners, we contribute property taxes as well and support those communities in that way.
Okay, next up, an incoming question. Thank you very much for all the questions you asked us. Use the chat. How are assets valued and which benchmark is used? Very good question.
Yep. So assets are valued very similar to a real estate asset. And we, on an annual basis, receive a third-party appraisal by a qualified appraiser, and they use both an income approach, a cost method, and then a comparable sale, or what we refer to as comp sale. And they'll take those methods, they'll weight them accordingly, and they'll provide a value. On the income approach, they take our inventory, and the inventory is the trees that you have in the forest, and they prepare a 50-year harvest schedule, and they determine what are your revenues, what are your costs, so ultimately, what are your cash flows over a 50-year period, and they value that would be the income approach. comparable sales, what sales and transactions have occurred in the marketplace, and those will be the most heavily weighted. We take that would kind of strike the NAV or the value for on an annual basis, and then each quarter we'll make a quarterly valuation change based upon harvest activity and projected growth of the forest.
And the benchmark?
The benchmark, there's one benchmark, it's somewhat flawed, but it's the NCREIF Timberland Index. It's about 28 billion in assets that make up that benchmark, and it's a U.S. only benchmark. That's why I say it's partially flawed, but it's the best benchmark we have, and that's what many of the clients use.
Okay, next question. Do you use leverage?
Typically, no. If we do lever a transaction, it's primarily around what we would call internal leverage, or you're structuring leverage to create the best tax outcome possible. Why don't we like leverage? It's because it can take away your optionality. I talked about biological growth and why that's important. If I lose my optionality and I have to harvest trees in a low market and sell them to make my debt payment, I've taken away all of that optionality with the growth. I want to be growing my inventory during low prices, wait for those prices to recover, and then put that inventory out and achieve higher pricing.
Right. And there's also a question about the products you have, but we can talk about that later on. First, I would like to share the results of our last poll question with you, our previous poll question. Here are the results. Any thoughts, Stephen, here? Which factor do you consider most critical for timberland investments?
That's an interesting spread across the board. I must say, I'm a little surprised that carbon is low on the list. We talked to a lot of investors here in the Netherlands who are really keen on achieving their climate goals. But I'm very pleased to see the mix and particularly the focus on biodiversity and sustainable forestry practices.
Okay, we have also a next poll question that's about the risk part. Which risk do you believe poses the greatest threat in forestry investment? 3 options, and we will talk about that part later on. First, Stephen, could you elaborate on the concept of negative carbon impact here?
Yes, I'm happy to, and I think we have a slide to help illustrate the calculus behind this. And you know, we can only manage what we can quantify and measure. And so the firm about 6 years ago started carbon footprinting all of our assets under management. And essentially what we do for every single property in the fold, we perform what we refer to as a year-over-year carbon stock assessment. So January 1 of the year, how much carbon do we have above ground in the trees? And then at the end of the year, we calculate that same measure.
And then
we compare what's the difference, and then we subtract out all of the harvest removals that we had through our operations, and then we quantify our scope 1 and 2 emissions associated with that. And ultimately that gets you to this carbon footprint result, and you can see here from the graphic, we did have a net negative, what I refer to as planet positive outcome, where our forest incrementally year over year in 2022 sequestered an additional nearly 2.4 million tons of carbon on the landscape. And it takes purposeful, intentional management. You could buy a forest that's got a lot of old trees and cut all those old trees, and you would not have a planet positive outcome. So it speaks to the importance of not only the day-to-day management, but the portfolio construction to be able to deliver these results. And then Angie, I think on the next graphic, can help investors understand the real impact that they can have on a portfolio.
So bringing it to life, we've taken a $10 billion portfolio, invested 60% in equities, 40% in fixed income, and we've allocated then 1% of that portfolio, or 100 million, into our product. So what does that mean? Number one, we know what the emissions are from that 60-40 portfolio. That's the first bar. 620,000 pounds of carbon are emitted from that investment portfolio. As I mentioned, forestry is one of the only major asset classes you can invest in that has a net negative carbon outcome. So just taking that 1% allocation from emitting to negative reduces your overall carbon exposure by 1%. Just making that allocation. Then the net negative carbon footprint that Stephen noted on the prior slide, that creates another 5.5% of reduction in your overall carbon emissions. We talked about the carbon offset sales. Well, there's another thing you can do. Instead of selling those to a third party and they take that carbon emission benefit, you can keep those on your own balance sheet. You can retire them for your own carbon emissions purposes and reduce your footprint another 6.4%. So in total, almost 13% reduction in your investment portfolio for a 1% allocation. It's extremely meaningful. And as Stephen said, we've been having a lot of these conversations with investors about how this asset class can help them with that 2035, 2050 net zero commitment that they've made without a true roadmap to get there.
I see. Interesting. By the way, all the slides we share after this show, so all viewers will receive the slides. You mentioned biodiversity. Maybe it's interesting to know a little more about the biodiversity management of Campbell Global.
Yes, absolutely. And I think I mentioned earlier, every property is unique, and the same applies from a biodiversity perspective, whether we're talking about koala bears in Australia, native endangered tree species in Chile, gopher tortoises, red cockaded woodpeckers in the U.S. We work with a broad range of species. But I think what I really would like to communicate is that given the property-specific attributes, we do a lot of due diligence before we acquire a property to understand what species are present, what species could be present or have been historically, and what are their habitat needs, and how might we need to modify our practices to be able to ensure that those species are protected and that we can have a higher rate of abundance. And one of the ways we do that is developing biodiversity enhancement plans for every property that sets a baseline, identifies enhancement projects that we can act on, and then we can monitor and report our progress against that guiding document. And I think in Australia, I mentioned the koala bears. They generally live in the eucalyptus stands that are on the fringes of the pine. They're a little bit sloth-like, so they're not able to get out of the way in a hurry. So we do a lot of work to understand where are those koalas living, and isolating those from harvest. And if we do have activity, done very carefully and sensitively so we don't disturb those species. Yeah.
You also have a case study with you to bring it to life.
Yes, I think we've got a slide here on the marbled murrelet. I think this is a great example of the proactive approach that we've taken to biodiversity. So for those not familiar with the species, marbled murrelet is a protected species on the west coast of the United States. The population has dwindled considerably in the last 2 decades. They're an amazing seabird that flies miles and miles inland to lay its eggs. And the way that we track these birds is pretty interesting because they're the only creature flying at 90 to 100 kilometers an hour. So we literally set up radar stations on the coast and we see what drainages the birds are flying up. Then we move the radar upstream and we find out where they're nesting. And they don't really build nests. One of the cool things about the species is they need trees with limbs that are about this big or bigger because they don't build a nest, they just lay the egg right there and it stays. So when we find these locations and the biologists follow the radar and the biologists sit in the stands, and the protocol is you have to hear them because the humans can't see them. And so when we record those audios, we know we're in the right place, and we create a management envelope so that we don't impact any of those stands or disturb those limbs. And then we also have timing restrictions where during parts of the year we don't make noise, again, within, say, a mile or a kilometer and a half of the nest. Now, the other piece here on this case study, again, it's us actively working with the federal and the state regulatory agencies. And because of all the research, monitoring, and protection we're doing, In turn, those agencies give us an allowance that they're not going to continue to regulate us at a higher level in the future. So we're making an investment today, and then there's a benefit to the landowner, and it's just doing the right thing, but it does come with benefits. That's why I think it makes a great example.
I see. It's beautiful. Let's talk about the risks. First, we have the results of our poll question. Which risk do you believe poses the greatest threat in forestry investment? Yeah, let's talk about the risks.
Well,
What are the
phenomenal, because you all got it right. Usually, many of the questions relate around physical risks, which are important. But in order of magnitude, number one, economic risks are your greatest risks in this asset class, like all other financial asset classes. Second, physical. Third, reputational. So on the economic or the financial risk side, how do we manage that? And we think of supply, demand, and pricing. Supply in this asset class is well known. The forests around the world are well known, they're well mapped. Hard to overbuild a forest asset in a 10-year period or 20-year period. So supply, let's say that's covered. Demand is where your risk is at, demand of new home construction, repair, remodel activity, which will follow GDP growth typically and income growth. That's cyclical, much harder to manage, and it really comes to the price. Pricing is where we can manage that demand risk. So again, if prices are low, we can leave the trees in the forest. We can hold off on harvest activity until those prices recover. Now, you can't do it forever. You can't just let the trees grow and grow until they're too large to do anything with. But you really have a nice 5-year window before and after where you had planned to harvest that you can manage that price risk. On the physical side, I think Stephen covered that well, how we manage around physical risks. And again, a healthy forest is a resilient forest. An example of unmanaged physical risk is what we all see on the nightly news with these devastating fires. Those are almost entirely on publicly managed lands that are unmanaged. I say managed lands, but they're truly unmanaged. Dead and dying trees on the ground, lots of fuel on the ground, and also the trees are very tightly compacted together, creating just a fire experience that is very hot and devastating. Almost the opposite of what we do in our active forest management activities. And then reputational risk. Reputation is important. It's important in our forest management activities. With a proper reputation, it means that we will get our permits on time. It's a highly regulated industry, by the way. But you want to get your permits so you can get out there and do your activities as planned. If you have a poor reputation in the area, you will find many roadblocks. On the carbon offset side, the verified carbon assets, if I'm selling poor credits into the market and creating greenwashing per se, again, that is a poor reputational outcome. And then social, very important of how we act within our social communities and how we're proactive in that way.
And when we talk about risks, you also have a case study. Maybe you can give us the highlights.
Yes, I wanted to highlight the work we do around indigenous peoples and their rights and their cultural traditions. It's really important. Everywhere we operate around the globe, there's some element of this, and we spend a lot of time in our due diligence efforts making sure, are there land use conflicts? Are there cultural needs that maybe the properties had served for tribes in the past? So I just brought one case study here from Chile. The Mapuche is the indigenous peoples there, and there's unfortunately been a long history of land use conflict and in many cases violence associated with it. And so you have a underrepresented class that has very few options for gainful employment and access to public services. When we bought our most recent asset, we did our due diligence, and while we didn't acquire anything that was under conflict, we do have about 1,000 hectares that are nearby. And so again, we took a proactive approach and reached out to the tribal elders, made a connection, found out what was important to them, let them know who we are, and then we're building out a program here, as you can see, to create some employment opportunities for them and have them plant trees and help us restore that piece of ground we have. So I think that's just one example. There's many others. But it takes, again, thoughtful management and the outreach to these communities so that they know we care and we understand.
Right, and we can also share this example afterwards in our deck with more information about this topic. Maybe the most important question today, especially for our audience, how can people invest in forestry?
Yes, great question. Thank you for that. Two primary ways. One is through separately managed accounts. We have many investors in that bucket. But you need to have scale to have a separately managed account, and we think of that as you should have an allocation of $250 million or greater, and that's because you need to build a diversified portfolio. Diversified both against the economic risk. All regions don't act the same at all times, so you want diversified for physical risks, etc. So you need to be a quite sizable investor for a separately managed account. The other option is a commingled fund. So we're commingling those subscriptions together so that we can then provide for that diversification in a meaningful way. So we do have a commingled fund in the market today, Campbell Global Forestry and Climate Solutions Fund 2. It's a core forestry strategy where we're investing in the core regions we described. 70% of the strategy is allocated to that. 30% to carbon projects, highly efficient carbon projects where we can prove true additionality and where we plan on selling those carbon offsets, or investors also have a choice to receive those in kind. Less income if they do that, but they have that option. Final close is December 2024. It's $1 billion fundraise, and we're over halfway there. We're at about $550 million. Importantly, it's an Article 9 fund, the darkest green that you can be, with the binding element being a net negative carbon outcome over the life of the fund. We've had 1 year performance in the fund. We have seed assets already in the U.S. South, and excited to talk more about the product as investors are interested.
Yeah, we have questions about the products. Do you also have a fixed income product?
We do not have fixed income. The only thing we do is timberland and forestry, though JP Morgan, the wider JP Morgan network, clearly has many fixed income strategies they'd be happy to talk to you about.
Okay, let's take a look at more incoming questions. Thank you very much for sending them to us. What's the view on the price development of wood in the coming decades?
Well, we see increasing demand. Population growth is expanding. There's certainly really major trends toward more sustainable building materials. You know, you see that in the UN SDGs, and we're seeing that real time. And I think one fantastic example is the rise of the tall wood buildings. So historically, you know, you've seen 2-, 3-story buildings made out of wood. Now across the globe, we're still seeing 14, 18 story buildings that are built from these mass timbers. And what the feedback is, which is really, I think, kind of a circulation, a good circulation, is people can build these tall wood buildings quicker, and so they're more efficient and cost effective, and then they can lease them out for higher rates because people like the friendly. And in fact, there are some studies coming out showing that it's healthier to live and work in these tall wood buildings. And so those are the type of trends that we see, and there's a real pent-up demand for housing across the globe, and that has to change. And so we want to be there to support that expansion.
We have a team of PhD forest economists, and really all they do is track log pricing and forecast log pricing. So it differs by region. Clearly, there's issues in China right now and their real estate market. So we have a price forecast for each region and actually each sub-region within that region, because Stephen often talks about wood baskets. A wood basket would mean something within 200 kilometers, and your pricing can differ in each significant wood basket that we have. But we do have forecasts for each one. I would agree with Stephen. For the most part, they're upward trending, but not in all cases.
Okay.
Yeah, and fundamentally, you have large markets like the U.S. and Australia that don't produce enough wood to meet the demand already.
Right.
So that's the situation that we're stepping into from the starting blocks as we look to the next decade.
Okay, last question for today. Can you elaborate on the carbon markets and how are companies getting exposure?
Well, companies get exposure to the carbon markets really just through buying carbon offsets. And so, again, let's take an example. If I'm Disney, they need to buy carbon offsets to offset their emissions. They will come to sellers like us who produce these carbon offsets, and you individually negotiate a price. That is the primary way that there's buyers and sellers of the carbon offsets, and how I can take advantage of that market.
Okay, we have a lot of questions, but for now time's up. But people can ask questions to you, of course, and to your team and your colleagues, and we can answer them later on. For all viewers, we have the slide deck with more information about this topic. We learned a lot about timber investments. So thank you very much for joining us today and sharing your story. Thank you.
Our pleasure.
Thank you. It was great to be here.
And thank you for watching this Pensioen Pro partner webinar. Have a great day. Till next time. Thank you very much. Thank you.